There is choppiness and risk aversion naturally because the yen is strong, but no problem with the strength on the yen. We were looking at let's move straight to trade management. So we're looking yesterday we were looking at the structure that with 5 into 3 has finished. Now market is doing an A and a B and is going to be doing a C. This is a higher degree wave A, this is going to be a higher degree wave B. You're looking at a 4-hour chart, you're seeing inverted head and shoulders, of course. All of this is at the lower boundary of an uptrending ending diagonal. It is possible in that wave C, you see on the bottom of that wave B, to see a new head. You are really looking at the structure inside of an ending diagonal. We're having double heads and shoulders. Now this could be an inverted become an inverted head and shoulders. There's a diamond structure, so we would want to sell 157. We would want to sell 157.7, 158, all the way down to 152 and 151.7. We would want to be on the sell side for the time being. Okay, there's going to be a bounce at that level 1, and then maybe we break higher on better fundamentals. All right, so yesterday we were going to do a very short-term long at this level because we believed wave B is going to equate with wave 5 into 3. This was a bit speculative, and therefore if we are doing that long, if we get a bounce higher, we go out of that long because wave B is on the weaker side of the equation. Wave B could actually terminate here and we get that wave C down. So on the current momentum plots, it's not guaranteed that wave B will take us all the way to do a second head. We're looking here at double heads and of course shoulders. This is the current 1 hour chart. And it's not guaranteed that what we're seeing here as an head and shoulders should take us all the way to 158. We want to short 158 and we want to short 157.26, 157.70. But the current structure is not really guaranteed to take us to these levels. We cannot short, of course, at lower levels until we have negative momentum. But anyway, it's time to get out of the longs. It's possible that, at least for the time being, it's possible that we are really not going to be doing 158, but what we're saying is normal. So if we are still in the trade, we would hold longs and probably go out at 156.8 to 157.3. That would be around it. This would be level B that we are expecting, and then wait for higher degree momentum on the 15-minute chart, at least degree 3, in order to short the top of level B into level C. Very choppy trading naturally, but the market is a hold for that buy. We're going this wave B here that you're looking at. Just did an A and a B, and it's going to be doing a C on the current swings you're seeing. This is really a two-way market, buy and sell at the same time. So anything we're holding buys will make us money at the right time and level. Anything sells also will make us money at a different time and level. So we'll just look at that buy that we just did yesterday. We're having, of course, inverted head and shoulders. We're going to that neckline 156.87. Whatever we have bought, I believe it's around 156.5. These kind of levels can take profit. That's 157 and 156.87. We'll still have sells entries at level B here, 157.6 and one that is 157.5 here, and of course 158, just in case we get them. They're really sell opportunity, excellent sell opportunity. We would use it because we expect there's still another wave C down into this. You're looking at that wave C down. So we'll take it step by step. The buy is still good, just like that buy that is there with sterling. They're just depreciating on both fronts, but we expect there's gonna be strength in sterling fundamentally, and it is actually showing technically. There is resilience in the supports here. Therefore, of course, we're in the shoulder so it's a bit choppy in that shoulder. But the trend, of course, is, if this is really true, is to the upside. This is today's 4-hour chart, and we can see we are still doing a correction into degree 1. So if this was a 3 or a 1 becomes elevated in 1, it's going to be doing an A and a B and a C. You get to take profits if you're long, and you get to take profits if you're short. You really get to take profits on both sides of the trade. It is really true. So if you're long again, we take our profits as close to the neckline, even if it's possible. It will just take more time, 157.3 and 157.6. We show these levels, and we take profits at least 50% of the shoulder cycle. If we have negative momentum, we're gonna get another hit. It will not just be a shoulder. These type of formations usually do a very elongated ascending triangle between the shoulder level, between the neckline and the lower boundary of that ending diagonal. So to recap, if you're already long, the market is a hold. We will not enter longs again at this point. The market is a hold until 157 and 156.9, even 157.3. We reverse into shorts at 158 and 157.6. If there's strong momentum, we can get to see another head. If there's not strong momentum, we'll just take profits at 50% into the shoulder level. Alright, you expect to see a diamond formation, so it's going to be choppy and quick. It doesn't really work with momentum.